So you're looking to build wealth through real estate? Smart move. But if you're still buying properties under your personal name, it might be time to rethink your strategy. Let me explain why using an LLC, a limited liability company, is a game changer for investors. 1. It keeps the property off your personal credit. When you buy a property personally, the mortgage gets reported on your personal credit report. That might not seem like a big deal, but as you scale, it becomes a huge roadblock. Why? Because it impacts your debt-to-income ratio. Lenders look at that number closely when you apply for more loans. If your name is tied to too many mortgages, even if they're cash flowing, it makes it harder to qualify for the next deal. Now with an LLC, that mortgage doesn't show up on your personal credit. It's tied to the business, not you personally, and that opens the door for future financing and faster scaling. 2. It gives you liability. Protection. Here's the reality. If something goes wrong on your property, whether it's a tenant getting hurt, a plumbing issue causing damage, or a dispute, you could be held personally liable if the property is in your name. But with an LLC, you create a legal wall between your personal assets and the property. So if there's ever a lawsuit or claim, the LLC is on the hook, not you personally. That kind of protection is essential once you start owning multiple properties. You don't want one issue putting your entire financial life at risk. Just make sure the LLC is set up correctly and you maintain good records. That way the protection holds up in court. 3. Tax flexibility. More profit in your pocket. This is where things get even better. An LLC gives you more tax strategies to work with, especially if it's set up as a pass-through entity like a sole member LLC or S-Corp. You can deduct a long list of real estate expenses, mortgage interest repairs and renovations, travel for property management accounting, legal fees, and more. You're keeping more of your profit because you're legally reducing your taxable income. And if you work with a good CPA, you'll learn how to maximize depreciation and potentially qualify for even bigger write-offs, which is a big deal if you plan to reinvest that income into more properties. Bottom line, buying real estate in an LLC gives you 3 major advantages. 1. You protect your credit and ability to get more loans. 2. You protect yourself from legal liability. 3. You keep more money through tax deductions. If you're serious about building long-term wealth, setting up your properties in an LLC isn't just smart, it's necessary. And if you're wondering how much you can qualify for or need help structuring your first deal, check the link in bio and click Get Pre-Approved to get started.